Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks rally after US equities power to fresh record highs. The ECB's Christine Lagarde calls for close monitoring of sticky inflation, while Fed Chair Jay Powell points to progress in the US.
If you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings. You can see the labor market is cooling off, appropriately so, and we're watching it very carefully.
French bonds gain as more than 200 candidates pull out of Sunday's election ahead, of course, that second round vote, as some of the members of the parties on the left and the centre try to deny the far right a majority in Parliament. And it is the final countdown to the UK's election, with polls pointing to an historic victory for the opposition Labour Party. But surprises, of course, cannot be ruled out. We'll break down the potential outcomes. European markets then pointing a 30-second record then for US stocks. Nasdaq up above 20,000 for the first time. The S&P closing back above 5,500 for the first time. So fresh records across the US. The handoff then positive to Asia, and the European pickup that you're seeing right now. European futures pointing higher by 0.5% after the losses that we saw yesterday across European equities. FTSE 100 futures currently looking to add around 34 points. S&P futures, bit of a breather after the record of yesterday, pointing lower by about 0.1%. Nasdaq futures flat as well. And really interesting to see the gains come through without Nvidia at play. Tesla, though, gaining around 10% on the back of deliveries that were better than expected. Let's flip the board and look cross-asset. We are, of course, focusing on what is happening in the debt market still of France, given the political horseplay that's involving and evolving ahead of that second round vote on Sunday, of course. So there is a bit of a bid for French debt. We'll see how that plays out in the hours ahead. That's the futures picture then in terms of OATs. US 10-year at 4.43, weighing up the comments from Fed Chair Jay Powell. Some in the markets taking that as relatively dovish. Markets still pricing in close to 2 cuts by the end of this year for the Fed. Euro dollar at 107, and Brent holding a relatively stable at these highs of around $86 a barrel, currently up 0.5% so far in the session. Let's cross over to Avril Hong, standing by in Singapore for a check of the Asian markets. Avril.
Yeah, Tom, we're seeing Asia stock investors in a pretty good mood. The stock gauge is on a 4-session winning streak. Today it's the infotech sector that is outperforming. The idea that the AI and the chip investments are getting spurred along by the optimism about Fed rate cuts, thanks to Chair Powell's comments about disinflation path. And today we're seeing the Hang Seng outperforming, but I also wanted to highlight what we're seeing on the Nikkei, highest level since March, well above the 40,540 level, and we're also seeing the tech sector doing well there, although the CSI 300 is underperforming. We did get a data point that reinforced those concerns about the bleak prospects for the Chinese economy. Private survey of services activity worse than expected, 8-month low. We're talking about the Caixin services PMI, of course, and that just reinforced the concerns about the Chinese economy. Let's flip the board and take a look at some of the stocks that are in focus today, because the EV numbers, suppliers, I should say, for Tesla are doing well on a day that investors are reacting to Tesla's sales drop. Not as bad as expected. So the likes of LG Energy are among the biggest boosts on the Kospi. The other stock that I wanted to highlight on top of BYD, which by the way showed record sales for the second quarter, is SoftBank. This is a big boost for the Japanese indices today. It actually clocked past the record closing high. It hit a session high of 10,645, actually moving back towards that direction now. No doubt this is a win for Masayoshi Son as the stock makes a comeback amid all this tech investment. And that is actually helping the topics as well. And it is at the highest level since 1990 based on the relative strength index, the 14-day one, moving towards the 70 level. It suggests that there is momentum for Japanese equities to the upside. Let's flip the board because, as I mentioned a short while ago, this concern concerns of the Chinese economy, along with what we're seeing on the greenback, are actually fueling the decline in the offshore yuan. You see dollar yuan just approaching that level 730, well past that level. And this is against the backdrop of what we're seeing on the implied vols for 1 month, which suggests that traders actually don't see that sudden strengthening in the Chinese currency. Today, the PBOC actually came through with a fix that was above 713, which suggests that the carry trade can carry on. We are also seeing the weakness on the Japanese currency today. Tom.
Okay, Ava Hong in Singapore with a market check there. Thank you very much indeed. Really fascinating in terms of how things have played out for SoftBank, as you marked. Now to the macro. And Fed Chair Jay Powell says the latest economic data suggests inflation is getting back on a downward path, but emphasised officials need more evidence before lowering interest rates. Powell was speaking at the ECB forum in Sintra, Portugal.
We want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy. Frankly, because the U.S. economy is strong and the labor market is strong, we have the ability to take our time and get this right. And that's what we're planning to do.
OK, at this point, let's bring in Bloomberg MLI's Mark Cranfield for the analysis on what we've been hearing from Jay Powell. Mark, is it your take that this is a Fed chair who is now leaning towards a cut?
He may well himself have an idea that he wants to lower interest rates as soon as he can. But you can see the traders are not really taking too much notice of it. As Avil just showed with that chart, dollar yuan is still very firm today. Dollar yen is even stronger. So certainly in the foreign exchange market, the strength of the US dollar doesn't suggest that the traders there think that rates are coming down anytime soon. They seem to be pretty relaxed about it. They believe in a strong dollar for quite a bit longer. Little bit of action in the Treasury market, but even so, yields have not really done a great deal. And it's no wonder, really, because if you think back to the beginning of the year, Jerome Powell sounded very confident that inflation was going to come down into the Fed's target range. And we're even at one stage, we're thinking about a rate cut before the end of the first quarter. Obviously, that didn't happen. Inflation numbers came in along the way, which set back the Fed. And probably people are thinking, well, until we actually see hard evidence in the CPI reports, we're not going to get too excited, even though Mr. Powell himself may well see something that the traders haven't seen yet, but they're not going to get ahead of themselves. And of course, in the background, you've got the rumbling story about Donald Trump seems to be the lead candidate for the moment. There's a big steepening trade going on in US Treasuries, which is supportive for the US dollar. Meanwhile, equities are in their own little world. They're very happy because the tech companies are doing well in the AI story. So we've really got to disconnect across asset classes, and it's pretty hard to see that there's a uniform opinion that everyone agrees interest rates are coming down in a hurry in the United States.
And there doesn't seem to be a uniform opinion on the ECB's next steps either. Or do you have more clarity, Mark? Because, of course, there was an interpretation from some that the cut that came through in June from the ECB, the first one in the cycle, that they were compelled to do that they'd locked themselves into essentially going through with that June cut. What are the next steps? Do we have clarity, given what Christine Lagarde has been saying, around when they will go next?
I think there's much more chance that the European Central Bank will follow up with a rate cut than the Fed. In fact, the ECB will probably have 2 rate cuts in before the Fed even gets started. And obviously, there's huge differences here. If you think about what's happening in the European economy, there are some real pockets of weakness. And you've got a country as big as Germany, which is usually the locomotive for Europe, is not doing that well. And that's a major concern, not to mention some of the weakness in other smaller nations as well. And you've got the ECB committee is 28 people or so. And getting them all to agree on something is much more difficult. Plus, you've got a lot of doves within that committee as well who look for any reason to lower interest rates. So it's a bit of a different picture compared to the United States. But of course, the Fed have got key indicators such as the employment rate, which is still very, very strong, telling them it's not time to lower interest rates. But if you look across at Europe, inflation's come down a bit more quickly. The jobs situation is not as good across the whole region. And growth factors are pretty low as well. So the ECB definitely has more reasons. Whether they can get across the line at the next meeting, maybe not. But at least sometime during this quarter, there's a pretty decent chance the ECB will be in a position to lower rates. And that's what the markets are counting on.
OK, and Christine Lagarde saying that services does not need to get down to 2% in terms of services inflation for them to act. That, of course, they have to weigh up the different elements within the inflation mix. With the analysis then on what we've been hearing from Jay Powell and, of course, Christine Lagarde and the impact for the market expectations. Bloomberg MLI's Mark Cranfield. Mark, thank you very much indeed. And, of course, a number of ECB policymakers were asked about the politics of France as well and how that was tying into their thinking. So more details on that story now as we keep a finger on the pulse of French politics. More than 200 candidates have withdrawn from three-way runoffs ahead of France's second-round election on Sunday. This as other parties seek to avoid splitting the vote against the far-right National Rally. Let's get more from Bloomberg's Xiaolin, of course, has been covering all of this for us from day one. Xiaolin, how have the parties been manoeuvring then ahead of that crucial runoff on Sunday?
You know, Tom, the candidates had until 6 p.m. last night to register for the runoff. And as you were mentioning, in fact, more than 220 candidates, according to the latest count from Le Monde, we'll get the final result later today, are pulling out of the race, meaning those who came in third position are now out of the race. That means the National Rally is now in duels, facing either a left-wing candidate or a Macron candidate in a lot of the constituencies. There are less than 100 three-way contests left, and technically that decreases the chances of the National Rally getting an outright majority. Still, it is still a possibility. Of course, one poll is showing that the National Rally would get between 225 and 262 seats, so just shy of a majority. Remember, before the first round, Jordan Bardella, the National Rally president, was actually saying, if I don't get an absolute majority, I will refuse the role of Prime Minister. Now Marine Le Pen is actually saying that they could still take the job if they are just a few lawmakers away, so we'll have to watch that really carefully. If there are just 15 or 20 lawmakers away from a majority, they might try and grab a few of them, for example, from the Republicans.
OK, so that message around the Prime Minister and the majority has been moderated somewhat from the National Rally. Look, you touched on part of this, Caroline. What are the expectations? What are our best predictions that are coming through in terms of how this could line up on Sunday?
I mean, obviously, absolute majority is still a possibility. The only other alternative really is a hung parliament, because clearly we're not going to get a majority for Macron and we're not going to get a majority for the left wing. So a hung parliament, and some analysts are actually saying that a technocratic government could be possible with some personality outside of politics, outside of parliament coming back, such as the former WTO director, Pascal Lamy. Even the current Bank of France governor, Villeroy de Galhau, has been named, or the current ECB president, Christine Lagarde, who is not totally out of the French scene, even though some actually do not agree with that scenario. Have a listen.
I think that a technocratic government is not in the French tradition at all. It might be a solution in other countries, namely Italy. What I would expect in case there is no absolute majority by either political sensitivity, I think that the president would probably try to have a coalition government.
So if it's not a technocratic government, according to the former ECB president Jean-Claude Trichet, what could we have? A political coalition with some moderates from both sides. The far left already has said they will not join a coalition unless Macron abandons his pension reform, which is something that, of course, he is very unlikely to do. So getting some moderates from both sides, and in that case, the possibility of a moderate center-left face as prime minister. For example, the former president, François Hollande, who is also running as MP, and there are some other figures like former prime minister Bernard Cazeneuve, also socialist, and some socialist MPs like Valérie Rabault, who has said that she is ready to also take the prime minister role. But of course, a lot of unpredictability for this runoff on Sunday, so it must still be a little premature to see what exactly is going to come out of this.
Okay, Caroline Cornin, thank you very much indeed. And the latest out of Paris on the French elections and the French politics ahead of that Sunday vote, of course. Thank you very much indeed. Here's what else we'll be thinking about today, though. 8:15 UK time. We're going to get Spanish services PMI, so a data point in terms of the health of the Spanish economy. At 10:30 UK time, Germany will be coming through with a 10-year auction. We see how much demand there is for that German sovereign debt. And at 7 p.m. UK time, on the back of what we've been hearing from Fed Chair Jay Powell, backward looking, but it will inform our views in terms of how the Fed is thinking. The Fed minutes, 7 p.m. UK time, really important in terms of getting a bit more detail in terms of Fed officials' thinkings in terms of the next steps and when they may go with that first cut of the cycle. Coming up, China's services sector expands at its slowest pace in 8 months. We'll have the latest on the world's second largest economy and how to position if you have exposure to Chinese assets. That is next. This is Bloomberg. Welcome back. Happy Wednesday. Now, China's services activity expanded at the slowest pace in 8 months in June, adding worries over the outlook for the world's second largest economy. Let's get the details on how that economy is evolving and also how to position as well if you have access and exposure to Chinese assets, of course. Let's bring in Xiaolin Chen, head of international at Kraneshares. Xiaolin, you talk about the fact that what you're seeing in terms of the Chinese economy is a bit of robustness, that there's underlying strength to this economy. A lot of data would suggest that has challenged that view. What are you seeing that gives you that confidence that actually, fundamentally, this is an economy that has still resilience?
Tom, since the recovery of pandemic, a lot of Chinese households hold a lot of savings on their accounts, has not spent at all, okay? Some of the Chinese corporates even have a very strong, robust balance sheets. On their balance sheets also hasn't spent yet. So those are very solid. It's not a liquidity issue. All those corporates and households are rich with liquidity. They haven't even put into work yet. That's where we stand as one. Second, the policy has been so accommodative that it's yet to see materializing in the underlying economy. So you have liquidity, you have a pro-policy. And now, obviously, you're just waiting for a bit of momentum. I think the momentum got to be the leadership, Chinese government, put everything into action. Okay, you lead by example. For instance, they have been very much gung-ho about the climate issue, green economy. Set by example, set more power grids yourself, do the actions yourself, deal with the unemployment rates, so on and so forth. So in my opinion, given where the valuation is, how healthy some of the corporates, not the real estate sector, of course, they are at today, it's not even happening yet. That's my point.
There has long been a view that if you follow the policy in China, you can reap the rewards of that as an investor. And you flagged two sectors, artificial intelligence and clean energy, the sector you were just talking about there. The issue is that if you align with those policies around AI and clean tech, for example, you also risk facing that tariff and sanction risk from the US and others. So how do you pivot around that?
Those sectors has been heavily priced down with those headwinds that they may face, restriction with U.S., even import restrictions. I was literally in China about a few days ago. This is my second trip in 3 months. What I've seen, I also attended Summer Davos in Dalian, so I listened to Premier Lee's speech, and over 20 minutes, he mentioned innovation, stay innovated for 35 times, Tom. And he also said AI, clean energy, and also healthcare technology, those industry can be $1 trillion industry. If he really meant it, he should put a positive policy to it. And also met with a few AI technology companies onshore. They do believe they have a product, not one-to-one with NVIDIA's A100 model, for instance, but it can be up to 70 to 80% of the capacity. So that gave me a bit of confidence to say, domestically, they are not pausing on their development on AI, period, end, regardless whatever the headwind they face. In fact, all these headwinds allow them to position themselves for plan B.
But as an international investor, how do you get exposure to that story without exposing yourself to the risks of tariffs and sanctions?
Well, a lot of them are focusing on domestic investors. Give you an example, you know it well. WeChat is an app they use in China. It's owned by Tencent. It has 1 billion daily active user. They have a very advanced machine learning model.
So you buy big mega cap tech names in China?
We do.
Like Tencent, like Baidu, like Alibaba, they're back in favor?
Exactly. That's our indirect play to say these big giant tech company has to lead. If you have 1 billion active user that you know using your app, you got to lead for the next generation of the product, which they are developing. So we are playing indirectly there. We also have a very direct play of China clean technology. The government spent nearly $500 billion last year just on the clean and climate issues. And a lot of the clean companies in China are really leading. Like their solar panels, 95% is produced in China. So their technology, I also visited a couple of, solar company. Their conversion rate is world leading. So they have to reward them.
Okay, what about November, the US elections? How do you factor that in to any exposure you want on China?
This is a question I got asked during my entire Asia trip. Okay, every Chinese client I meet, and they ask me the same question.
Are they more worried about Trump or Biden?
They kind of like sit and watch. I think they kind of not deal with them all already with one term. Will be the second term for both candidates. So they kind of prepared to know what could come to their way, one way or the other, with one candidate or the other. There's no clear preference, but they more wait and watch.
Okay, one final one before we let you go. It's the third plenum, which basically is a meeting of 400 or so of party leaders. That's happening later this month.
Yeah.
Are you expecting any significant policy from that could be market moving? What are you going to be watching for?
Initially, market has high expectation when the meeting announced. Me on the same camp. I want to hear action. Okay, there's a lot of policy has been introduced since last quarter, first quarter in 2023. Excuse me, my voice. Nearly 5 quarters. So this meeting, I want to see concrete policy implementation.
Okay. Chen Xiaolin, thank you very much indeed.
Thank you.
Head of International at Kraneshares, on what to think about in terms of the Chinese markets with, of course, the political overlay, but opportunities is... Xiaolin is making the case, particularly around clean tech and potentially AI as well. Coming up, Tesla beats estimates with a less drastic drop in EV sales, sending shares soaring. We're going to bring you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making news this Wednesday. Independent film and TV producer Skydance Media is said to have reached a preliminary agreement to buy Shari Redstone's National Amusements and merge with Paramount Global. Sources say an agreement could be announced within days, though the deal could still fall apart. The Wall Street Journal says Skydance is offering to pay $1.75 billion. Bloomberg has learned that Apple is getting an observer role on OpenAI's board. Sources say the head of Apple's App Store, Phil Schiller, has been chosen for the position. Apple earlier announced it would offer ChatGPT on the iPhone, iPad and Mac as part of its suite of AI features. And Tesla shares have jumped after a second consecutive drop in quarterly deliveries was not as steep as forecast. The EV maker delivered just short of 444,000 vehicles in the second quarter, 4.8% fewer than a year ago. Tesla blamed the slowdown on a suspected arson attack at its Berlin factory, as well as shipping diversions from the Red Sea. Those issues highlighted for the first quarter. The second quarter, again, the deliveries less bad than had been expected. Coming up, as questions linger over Joe Biden's debate performance, we take a closer look at comments from senior Democrats and what it could signal about how the Democratic Party is thinking about the president and his position ahead of November. That is next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks rally after US equities powered to fresh record highs. The ECB's Christine Lagarde calls for close monitoring of sticky inflation, while Fed Chair Jay Powell points to progress in the US.
If you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings. You can see the labor market is cooling off, appropriately so, and we're watching it very carefully.
French bonds gain as more than 200 candidates pull out of Sunday's election runoff as parties attempt to deny the far right a majority in Parliament. And it is the final countdown to the UK's election, with polls pointing to an historic victory for the opposition Labour Party. But of course, surprises cannot be ruled out. We're going to break down some of the potential outcomes. Let's check in on these markets then. European futures pointing higher to gains of around 0.4% the last time I checked. On the back, of course, of the fresh records that came through on Wall Street, the S&P gaining, again, crossing above 5,500. The Nasdaq above 20,000, the 32nd record this year to date for the S&P. The momentum continues, of course, and expectations that the Fed is still positioned to cut. Markets pricing in close to 2 cuts by the end of this year for the Federal Reserve, weighing up the commentary from Jay Powell over in Sintra, Portugal. There's a European stocks futures picture then, looking to add around 22 points. The FTSE 100 here in the UK on the final day of campaigning ahead of the vote tomorrow, of course, adding 0.4%, looking to add 0.4%. S&P futures taking a bit of a breather after the gains of yesterday and that fresh record, pointing lower by just 0.1%. Nasdaq futures essentially flat. Let's flip the board and look cross-asset then. We continue to eye moves in and out of sovereign debt of France. And for now, French debt is bid. We'll see how that, of course, shapes up through the trading day today as we continue to keep across how the parliamentary arithmetic is shifting, or at least the potential shifts ahead of that second round vote on Sunday. The US 10-year at 4.43, currently flat. Yields did move a little lower on the back of the comments from Fed Chair Jay Powell. We look ahead to a lot of data out of the US as well today in terms of factory orders, jobless claims and services data. Euro dollar at 107, Brent $86 a barrel, up 0.5% so far in the session. Let's get to the politics of the UK then. It is the last day of campaigning before that UK general election, with polls showing the opposition Labour Party still firmly in the lead. By 10 p.m. tomorrow, we will have an idea of the result as the exit poll is released. Bloomberg's UK correspondent Lizzie Burden, of course, joining us now to walk through the likely outcomes. Lizzie, what are we looking at then, potentially, in terms of what could come through at the end of the vote on Thursday?
Well, Tom, all the polls have indicated that it's going to be a Labour victory. The question is, how big will that majority be? So let me take you through the scenarios set out by the bookmakers in order of likelihood. First, starting with scenario 1. A Labour majority of 250 plus seats. Now, the Conservatives are warning that this would be a supermajority, a term imported into the British political lexicon, and it's a new one. But the reason the Conservatives are warning about it is because the Labour Party would have untrammelled power to pass its legislation. Labour dismisses that, by the way, as a desperate bid at the last minute by the Conservatives. But nonetheless, for Keir Starmer, the concern would be that actually there'd be pressure on him to be bolder about his economic agenda. Bloomberg Economics says that that would be a boon for the UK economy. Remember, some economists like the Institute for Fiscal Studies say that currently his plan is a gamble on growth. Now, let me take you to the next likely scenario, a majority of 150 plus seats for Labour. Put it in historical context. For Tony Blair in 1997, he got a majority of 179 seats. That kicked off 13 years in power. It would be bigger even than this record of Tony Blair's, and it would be twice as big as Boris Johnson's 80-seat majority in 2019. So, sorry, less than Tony Blair, but more than Boris Johnson. It would still mean that Keir Starmer could get his legislation passed, but what it would not mean is that the Conservatives would go into extinction. Now, let me take you on to the next scenario here, a 50-plus seat majority for the Labour Party. If we dial back through history, this would have been a big deal before we had Boris Johnson's Partygate, Liz Truss's 49-day premiership, but now this would be kind of a disappointment for the Labour Party because expectations are so high. I can tell you now, Tom, the headlines on Friday would be all about how Keir Starmer managed to squander his poll lead, what went wrong for Starmer, and how did the Conservatives manage to stave off defeat. But let me take you on to a less likely scenario now, a hung parliament. And this would mean that Labour wins, but they don't have an overall majority. It would leave Keir Starmer with two options. Does he want to run a minority government, or does he want to go into coalition with the Liberal Democrats, led by Ed Davey? And what would Davey want in exchange for his cooperation? Proportional representation, for example, closer ties with the European Union. And would Starmer be willing to give him that, or would he go back to the polls? That would be a real worry for financial markets. Finally, Tom, I just want to throw in another scenario, a wild card, as our fifth. This is the Liberal Democrats becoming the main opposition. The Labour Party still wins, but it would be the first time since the First World War that you don't have the Labour Party or the Conservatives as the official opposition. It would require the Liberal Democrats to make significant inroads into Conservative heartlands in the south of England. It's not impossible, but it is unlikely.
OK, Bloomberg's UK correspondent Lizzie Burden on some of the potential outcomes, of course, on what is the last day of campaigning ahead of the UK general election tomorrow. Lizzie, our UK correspondent, thank you very much indeed. To the US now, where former US Speaker Nancy Pelosi has said questions over President Joe Biden's debate performance are, quote, legitimate. Her comments come as Democratic Representative James Clyburn, a really big power player within the party, said he would support Vice President Kamala Harris if Biden were to step aside ahead of November's election. Let's get more from opening trade anchor Kriti Gupta, who, of course, has been across this story for us from the outset. Kriti, does this suggest there is a tide that is turning within the institution that is the Democratic Party when it comes to Joe Biden and his role ahead of November?
I wouldn't necessarily call it a tide, but I would call it some mini waves. And what's important to note here is I think the best indication is through the polling numbers. And you can see that in terms of expecting whether or not President Joe Biden, who, by the way, is right now the only presumptive nominee from the Democratic Party, his polling numbers are going down, not just in respect to President Trump as well, but in respect to the other members of the party you just named, Kamala Harris, Gavin Newsom, for example, both of which have rallied around the president saying, look, we support him. We expect him to lead the party into a second term as well. That being said, you are starting to see cracks. You mentioned some of the senators as well. This is the first time this has been outspoken. And a lot of this comes in the wake of just more and more kind of revelations and reporting around what it's actually like within the White House. The idea here simply being that not all aides get access to President Biden. Only senior aides do. Only members of his family actually get direct access. So there's a question now, some doubts emerging, to your point, about whether or not, even within the Democratic Party, even within Biden's own circle, they've really been exposed to his true well-being.
So what is the defense strategy then of Team Biden right now?
Well, he already came out from the get-go and said this is due to a cold. This is due to travel, 2 weeks of travel. He said it doesn't excuse it, but it is offering some sort of explanation. That's the verbatim from his comments as early as yesterday. He's also really campaigning, and his administration is campaigning on the idea that this is not necessarily about debate performance or outwardly well-being. This is about what is within. For example, as cheesy as that sounds, it really is about the fact that can you do the job? Can he actually be commander-in-chief? Can he be in the situation room when the time arises? And can he have a team behind him to help him make those decisions? And that's the message they're really trying to get across. OK,
Kriti Gupta, thank you very much indeed. Bloomberg opening trade anchor on how the Democrats are rethinking, or thinking at least, about the role of President Biden ahead of that election in November. Thank you. Now, the US ambassador to NATO says there are concerns over deepening ties between China and Russia. In an exclusive interview, Julianne Smith told us NATO is working to expose China's efforts to support Putin's war in Ukraine.
China takes every effort, every chance it can get to argue that somehow it's a neutral player in this war in Ukraine. But in reality, the PRC is providing a long list of dual-use components, things like machine tools and microelectronics that are enabling Russia to pursue this war of aggression in Ukraine.
Meanwhile, Finnish President Alexander Stubb says China should do the right thing and help broker peace in Ukraine. Speaking exclusively to us, he said that Russia is so dependent on Beijing, President Xi could solve the crisis with just one phone call.
In the beginning of the war, I think China was sitting on the fence. It was sort of looking around, trying to understand what was happening and why Putin was doing it and what the ramifications are for itself. But as time has progressed, and we're now almost 2.5 years into the war, China has started to provide Russia with different types of aid, not direct military aid, but issues linked to energy, sometimes even dual use of goods. I argue that Russia is so dependent on China right now that one phone call from President Xi Jinping would solve this crisis. If he were to say, time to start negotiating peace, Russia would be forced to do that. They would have no other choice.
How likely do you think that that phone call would be made?
I don't know, but I call upon China to do that. If China is genuinely interested in peace, if China is genuinely interested in harmonious relations between nation states, it cannot allow a country like Russia to drive an imperial, at the end of the day, aggressive and colonial war against a independent nation state. It needs to protect the international rules which are linked to territorial integrity and sovereignty. That is the right thing to do, and that would also show leadership from China. And I think it would get a lot of goodwill, not only from the global south, but also from most countries in the global west, were it to be taking a stronger role in ending this war.
Finnish President Alexander Stubb speaking exclusively to Bloomberg. Now, Hurricane Beryl is expected to generate, quote, a life-threatening storm surge and dangerous winds in parts of Jamaica and the Cayman Islands later today. The storm leaving a path of destruction behind in Grenada. The Category 4 storm is expected to cause more than $1 billion in damage. Let's bring in our energy reporter, Stephen Straczynski. So, Stephen, as we keep an eye, of course, on the humanitarian toll, we also look at the oil market reaction to this. $86 a barrel on Brent. What is the potential impact on the sector that you monitor from this storm?
I think this storm has brought a bit of an alarm bell to the industry, especially for this summer. Beryl became a Category 5 yesterday, storm hurricane. That's the highest on the hurricane scale in the United States. And it's the earliest that a Category 5 has ever been called in the U.S., in the Atlantic. And so because of that, we're expecting a very busy, a very robust hurricane season. Many powerful hurricanes are likely to go through the Atlantic and also into the U.S. Gulf Coast. Now, the Gulf of Mexico is where there's a lot of offshore drilling, as well as facilities that export not just oil, but also liquefied natural gas and many shale fields when you go onshore. So because of that, there is a fear that maybe not this storm, but many storms after this could affect output. Usually when a hurricane comes along, a lot of offshore rigs will just shut or curb production for safety reasons. So if there are many hurricanes that come through, and the larger they are, you're going to see a lot of these fields get shut. At the same time, if there is damage, if there's going to be repairs, that also removes oil from the market. Now, prices are also rising because at this time of the year, people are driving in the United States. It's the driving season. So we have some early indication that there could be one of the biggest crude oil draws, reductions in inventories for this week since January. So that's tightening the market. You've got potential production disruptions because of an active hurricane summer season. Those two together are helping to push Brent higher. As you say, we're at that $86 level. And OPEC Plus, of course, is still, they're going to be bringing oil barrels back to the market later this year. But right now, they're still restrained.
OK. Energy reporter Stephen Straczynski, thank you very much indeed on some of these factors, including, of course, the weather systems feeding into the oil markets. We appreciate the detail. Now to some other stories making news this Wednesday. Shares in Novo Nordisk and Eli Lilly fell after US President Joe Biden continued his push for cheaper medicines by demanding price cuts on their blockbuster weight loss and diabetes drugs. In an editorial published in USA Today, the president said the companies are charging, quote, unconscionably high prices that are above those paid in other countries. Meanwhile, a line crossing on Sanofi and Dupixent wins its drug, Dupixent, winning clearance in Europe for a lung disorder. So we'll keep across that story for you as well and see how the Sanofi share price reacts to that detail. Of course, 8 a.m. UK time at the market opens. Sanofi CEO Paul Hudson will be speaking with Caroline Hyde and Ed Ludlow on Bloomberg Technology later today. Among the topics out, the company is leveraging AI for drug discovery and development. Coming up, central banks offer a hint of optimism around inflation data, but will any of this year's election results add a bump to the path to lower rates? More next. This is Bloomberg.
For us is obviously looking at how do we maximize trade with the European Union in a sensible way. How do we make sure that we keep our population? We essentially have sovereignty for the British people. Yeah. That is really, really important, and we will not compromise on that. But do we want to have great trade relationships with Europe? Absolutely. By the way, we also want to continue to have great trading relationships with, the United States and a lot of other countries too.
Do you think having a strict immigration policy is inflationary?
I think it's, again, all about how you implement it. That's my position. So number one, if you look at Britain, it has we're sixth in the world in GDP. We're 21st in the world in terms of GDP per capita, right? And I would argue GDP per capita is actually a reasonably good bellwether for quality of life for people in this country. No one knows better than I the contribution that immigrants can make to this country. My parents came here 40 years ago, contributed half a century of service to the NHS. I've done my part as well to create jobs and pay taxes. But again, it's about numbers. And it's about making sure that we have, number one, a secure border. If you don't have a secure border, you actually don't have a coherent immigration policy because you're actually unable to implement it. Secondly, it's working out, okay, how do we ensure that we are able to address some of these huge problems the country has, which are driven in no small part, not exclusively, but in no small part by exploding demand for those services.
OK, Reform UK party donor Zaya Yousaf speaking to Bloomberg's Guy Johnson. Now, amidst a lot of political uncertainty, central bank policymakers have sounded optimistic around recent inflation data, but reiterated the need for patience on rate cuts. Joining me now is Jane Foley, head of FX strategy at Rabobank. And Jane, we'll get to the central banks, but I want to start on the politics of the UK and the argument that some are making now that the UK is something of a safe haven, at least UK assets are. What is the vulnerability of the pound leading up to this vote and the outcome post-Thursday? How much is priced in to the pound at this point?
Well, of course, we've seen now, as far as the pound is concerned, that this election has been really quite dull. Now, of course, dull politics is good for investments. So dull politics is actually, a very good thing in terms of building up the confidence within private sector investors and therefore building up the potential for growth. So this is perhaps what the market is hoping that this Labour government will bring after years of uncertainty connected perhaps with Brexit, the chaos perhaps of the Johnson government, and then of course the fallout from the Truss government. I think the market wants something dull, and in a way this is what the Labour government has promised. Certainly, if you look at the words of Rachel Reeves, she's been wooing investors, trying to get them to come back into the economy. Many are hoping that dull politics will lead the way for a recovery in investment growth in the UK, which could bring the growth. But, there are risks to that. What if, we have a huge, the supermajority that the Tories are warning about for the Labour government? What if, that means that we get more left-wing policies, more wanting to spend, perhaps less fiscal prudence than Rachel Reeves has expected? There are risks, but certainly if we take the Labour Party at its word, there could be, a bit of a rally for sterling on the election results, on the hope that we can see a few years of boring politics, stable politics, and therefore an improvement in investment growth.
And on the euro, Jane, what is more impactful, do you think, on the single currency right now? Is it the politics of France or is it the ECB?
I think we need to look at both. Now, certainly, all year, perhaps far longer than that, the market has been really focused on the ECB, focused on the outlook for interest rates, and quite right, and that will continue. Will the ECB, cut interest rates again once or twice more this year? That remains, a very important topic. But we've got to also remember that the market, in many respects, has today, to up until very recently, been very complacent on the budgetary issues around France, Italy, and some other countries too. Now, in the middle of last month, we did have Brussels warning about the budget positions of about 8 countries, including France and including Italy. And I think what we've seen now in French politics can only highlight the difficulties that France has been having with its budget, the difficulties it will continue to have after Sunday's second round election result. Because, in the last few days, the market has been sort of celebrating the likelihood that France could have a hung parliament. But a hung parliament means that it's not going to be able to really make much additional progress in bringing down its budget deficit, meaning that it is in line for further difficulties with Brussels. And I think as we move towards the end of the year, the market cannot be so complacent about that as it has been in the year to date.
Jane, just very briefly, what would a Trump presidency mean for the dollar?
Well, I think the Trump presidency on several fronts is inflationary, particularly if you look at the huge tariffs that he has been talking about. That would raise price levels, and that could actually be, those tariffs could be implemented without without Congress, meaning they could come through quite quickly, maybe the middle of next year. And that could mean that the Fed's interest rate easing cycle could be cut short very soon, almost irrespective of when it starts. And that could mean a stronger for longer dollar. So I think a lot of these policies, these growth policies in the policy and immigration could be dollar positive.
Jane Foley, Head of FX Strategy at Rabobank. Really appreciate your insights this morning. Thank you very much indeed. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back. We get a slew of US data out later today, but we also get the minutes from the FOMC's most recent meeting. So some colour and some detail in terms of how officials are thinking. Of course, in their most recent forecast, the dot plots, they were revised from 3 to 1. That's the expectation, the mean that's come through, of course, from the dot plots. The market's still pricing in close to 2 cuts by the end of this year. We're, of course, weighing up the comments from Jay Powell. Some took them as relatively dovish over in Sintra. But here's how the hawks and doves have kind of divided, ebbed and flowed leading up to the details around the FOMC meetings later today. So that's where we stand. But again, in terms of how they are positioning, Jay Powell saying that it is still finely balanced between inflation and, of course, the jobs markets. Coming up, it is the opening trade. The chair of the European Banking Authority, Jose Manuel Campo, will be speaking to the team. We're also going to discuss the results of the bank's risk assessment report. The opening trade is next. This is Bloomberg.